Hello traders and welcome to this week's live stream from Exness. I'm Michael Stark, Financial Content Leader, and I'm going to be talking a bit in the stream and hopefully answering all of your questions. But before we start, please let me know in the chat, in the comments, can you hear me okay? Is the screen clear? Are there any issues that you're having? And also you could tell us where you're joining from. That would be great if you could drop a quick message. Just say I'm joining from where, and it'd be great to welcome you. So far we have Laura saying merci beaucoup de rien. We haven't actually done anything yet, so it's maybe a little bit early to say thanks, but thank you for saying thanks anyway. And Ibrahim Adedokun, sorry I can't pronounce your name very well, says can't wait to begin. Yeah, neither can I. Can't wait to begin. So what we're going to be doing in this session today, please by all means drop us a comment in the chat. Tell us, what's going on, what you're excited to learn about in the stream, or what you're excited to analyse. And by all means, at any point, please drop a question, and we'll try to answer the questions as we go. And also, we should have plenty of time at the end of the stream to answer any questions that you might have. That I think is the most exciting part of the live stream. Usually, get some quite interesting questions that also help me to learn more and do more research about different concepts. And Joyce says, hello Michael, streaming from Nairobi, Kenya. Welcome back, Joyce. Happy to see Joyce once again, one of our regulars who we see every week. And are always excited for our questions, so we'll be analysing gold, I'm sure, at some point later. Okris says, Okris from Kampala, Uganda. Welcome, Okris. Thanks very much for joining us. If you have any questions, by all means, drop them in the chat at any point. And we should have plenty of time, I think, to answer all the questions. We're here for a little bit more than an hour and can go more than that as well, if need be. So let's start. What we firstly are going to be discussing is about the personal area at Exness. Here we have on the screen Exness personal area. I would just stress that this is a demo account. Please remember that everything that is being done within the stream is just my personal opinion and my personal perspective on things. Doesn't consider your own financial circumstances, doesn't consider your own trading or investment objectives. None of what I'm saying here is advice or a recommendation to do anything, and all of the accounts and symbols that we'll be looking at are demo accounts. None of these are live accounts, not recommendations to trade. Remember that trading is done at your own risk. So if we're in the client area and we go to the left tab here, we go under analytics, we can see firstly analyst views. And we can get from here a selection of various different ideas for trades that come from Trading Central. If we take an example of this one, Aussie dollar against US dollar, it gives us a preferred direction, Trading Central's preferred direction, what they think is most likely to happen, with some potential targets and possible stops in some cases, and also an alternative possibility if the price were to go in the other direction. So this is something that you can use within Exness's personal area to inform your own trades. And you can also find this tab here, which is market news. So the market news that we have here for the moment is still from Trading Central as well. And it gives you an update on pretty much all of the major releases that are coming out and a few of the minor ones as well that's likely to affect important CFD instruments, usually focusing specifically on Forex and on metals, but you can find various other things also covered. And also from the same tab, if we're under analytics in the personal area from Exness, from your personal area Exness, you click on economic calendar, you can go to Exness's economic calendar, which is on Exness's main website. And does have certainly some utility telling you which events are coming out when, but for our purposes here we're going to be using a different calendar because we're going to be looking in slightly more detail at some of the important events, what's come out when, and what is going to be coming out, what are the possibilities for that. But I can give you some insider information that this is in the process of being updated, so it's very exciting to see some of the early internal tests for this. Soon, hopefully, the new economic calendar will be launching, I think probably quite early in the new year. There'll be an updated and more useful, more descriptive, more detailed economic calendar available on Exness's main website. So that's really exciting. I think that's going to be really good. But for today, we're going to be looking primarily at trading economics for the fundamental part and the news-related part. And some of the primary reasons for that is that this gives you all of the releases in one place affecting all of the most important instruments that we're going to be looking at. And also because if we look at the economic calendar here, we can see the previous releases. We can also see the consensus and trading economics forecast for these releases. And it's also very helpful in my view to be able to see some of the past data and look at any kind of trends that we have in the releases that have come out. Kanaman 10kg says hello from South Africa, Johannesburg. Hello, welcome. Thanks for joining. TJFX says TJFX. Yeah, you're very welcome, Mr. TJ. Kels Austin also says hello. So hello to all of our watchers. Thanks very much for joining us. If you have any questions, any special requests or anything like that, any points of discussion, then please by all means drop them in the chat, and we should have plenty of time to get to all of them, hopefully. Usually we manage to answer all the questions. I think that is the highlight of the live stream, is answering the questions. All the other stuff isn't fun too, but answering the questions I think is probably the most fun part of it. So what we can do first, I think, for the fundamental part, is we can look at some of the most important releases that's coming out this week. And this week in general we have a really, really major week of economic data, because the American government, as you know, was shut down for a fairly extended period in September and October. So a lot of the releases from them have been delayed. That's why we've got the double NFP, which is coming up later today. A really, really important release. The NFP for both October and November in one go. And I think, broadly speaking, it's difficult to expect what's actually going to happen here. Note that we don't have any, or at least it's not expected, let's say, to get any unemployment rate for October. Probably going to be skipping that. But broadly speaking, since the summer, we've seen an overall somewhat negative trend in the American job market. If we look also at the total non-farm, we can see that in general, the situation has weakened quite a lot since around the middle of the second quarter, around late springtime. We've seen fairly significantly lower numbers of new jobs being added compared to expectations and also compared to the average. And that's something that possibly gives the Fed some support or some backing to cut rates, but also raises some questions about how economic performance is going to be in the USA. Is it going to be quite as positive as it had been towards the end of last year? Looks like probably not, but we'll have to wait a little bit longer to get the next GDP release. So it's really important, I think, to be watching the NFP this week. Main symbols that's likely to be moving around then is majors with the US dollar, and of course gold and silver usually likely to move quite strongly around the NFP. Possibly some indices as well might be moving around then. And I think an important note here is these releases, broadly speaking, in my view, are likely to be less reliable than they typically might be. And one of the primary reasons for that is that there's a significant delay. There's a significant delay in the reporting. So it means that in addition to the various other biases that the people who are surveyed for such a release are usually subject to, then we also have a certain delay bias. We have a recollection bias, it might be called, in that the respondents to the surveys, they need to think back what actually was the case back then, whenever it was in October, which now actually seems like quite a long time ago. I suppose it was 6 weeks ago, slightly more. So that it can potentially impact on the reliability of the data. I think it's fairly likely to impact to some degree on the reliability of the data. So we might see something fairly surprising. And it's also, I think, important to remember, if we don't have the data for October yet, which we don't, and we have the data for November and October at the same time, then it's difficult for many traders to actually set their expectations, because we don't know what the previous release was. It hasn't been released yet. So that's why I think we're expecting, or I'm certainly expecting, today's NFP to be really, really critical. And we'll look, I think, at some of the impact, the potential impact that it might have on charts shortly. We'll just quickly go through the economic calendar and highlight some of the main releases. And another really critical release for from the USA specifically is American inflation for November, which is coming out more or less as scheduled on Thursday. It's only a slight delay to inflation. And overall, it seems like that might slightly increase or it might hold. So that's another really critical release to be, I think, understood in the context of what happened with the NFP. And also, inflation might be somewhat less reliable than it usually is, but perhaps not by very much, because it's not horribly delayed currently. It's not horribly delayed compared to what the situation is for October's NFP. That is very delayed. Thursday is also a critical day because we've got the meetings of the Bank of England and of the European Central Bank. Bank of England very, very widely expected to cut a single cut to 3.75%, seems to be pretty much priced in, and the ECB is widely expected to keep its rates on hold at 2% for the main refinancing rate. And also really important this week, Bank of Japan is expected to hike its rate for the first time in many months. This expected rate hike has been pretty consistently pushed back, even though it seems possible that Japanese annual inflation headline might slightly decrease, as to be announced the previous night. And we also want to look forward to British inflation. That's the last of the upcoming really important releases for this week. So it's a very, very major week of data. Lots of very important data coming out primarily from the USA, but also the other three most important central banks are all going to be releasing their rates. So it's a really big week. And generally, when we have a big week of data like this, we usually would expect that many large participants in markets are going to be waiting. They're going to be biding the time, seeing what the actual result is, and then taking it from there. And I think in many cases it's a good idea for us regular traders to be doing that too, although I would stress that that's just my opinion. So where are we in the chat? So somebody from Ghana. Kels Austin from Ghana, welcome. Kels. Hello, watching from Nairobi, Kenya, Brian O'Doer. Welcome, Mr. Brian. Thanks for joining us. Abdul Majid says, when will you come in Pakistan? I don't know. I think you would probably have to ask the commercial team about that. No plans, for me personally or for my team to come to visit Pakistan anytime soon for work. But I'm sure, Mr. Abdul Majid, you would find out about that quite quickly if we were to be. You would hear. Excuse me. You would hear from your account manager. And then Mainzanyama says, hello, joining here from Zambia. Welcome. I'm sorry, I'm afraid I can't pronounce your name very well. Sorry, but welcome very much. Thank you for joining us. Abdul Majid says, when will you get licensed NOC from Pakistan government to operate in? That is a great question. I am afraid I can't help you with that. I would expect that that's something the compliance department is working on. But unfortunately, I don't know anything about that. It would probably be better to address a regulatory concern to support or possibly to your account manager. So unfortunately, I can't help to answer that. I don't know anything about that. Sorry, Mr. Abdul Majid, I can't give you a better answer than that. And then Joyce said, what are the main objectives of the Federal Reserve and its effects on trading? Yes, good question. Let's look at that. But I think firstly, let's just briefly want to look at what are some of the expectations, look back previously at what happened last week with the Fed, and then we will certainly answer that question as we go, Joyce. Thanks very much for asking the question. So we saw last week that the Fed, as pretty universally expected, cut rates a single cut. And now we have, broadly speaking, similar likelihood of there being a hold in January compared to what we had like about a week ago, or what we had like about a day ago. We have pretty similar likelihood of there being another hold in January. That hasn't changed a lot. Part of the reason that the month has changed is, of course, we know that definitely the rate has been cut. That has been done. So there can't be any probability of it not being cut. It's done now. As they're not going to be hiking again. So no significant change here. Whereas if we look at if we just go a little bit further ahead to March, then we can see that overall there hasn't been a very big change, but I think there's probably been a slightly increased probability of the more bearish scenarios happening. So we need another cut in January and also one in March to take us to 3.25. Unlikely scenario, but it's slightly more likely than it had been around this time last month. And it seems like the two main scenarios have become more or less parity, fairly close between the two scenarios. But overall, slight majority is expecting another cut to occur in March. And although the Fed has signalled only one cut next year, based on what was released around the last meeting, which is last week, then many traders are still expecting two cuts. And let's just quickly look at this. Although I would stress, of course, if we're looking at FedWatch for basically nearly a year in advance, then it's obviously not going to be terribly reliable. But the majority of traders, actually pretty large majority of traders, about 75%, is expecting at least two cuts. So let's see what happens with that. We'll get more input. We'll get more information about that probably in January. So let's look at what Joyce was saying. Joyce was asking the question about what are the main objectives of the Federal Reserve and its effects on trading. Well, the main objective traditionally of the Federal Reserve is price stability. It wants to try to target inflation and keep prices more or less stable within some reasonable range. And what that means in practice, historically at least, is to keep inflation, annual headline inflation, that is to say, to around 2%. Now, generally, the Fed doesn't directly target annual headline inflation. It focuses on personal consumption expenditures. And we talked, I think, the week before last, we talked a little bit about personal consumption expenditures, or PC for short, how that differs from inflation. It basically differs to do with the inputs, things like food, fuel. Various other things are not included in PC, but they are included in headline inflation. So it makes, theoretically at least, it makes the Fed's job easier, because certain things like food and of course the price of fuel is very difficult for a central bank to control, because it depends on various factors like supply and demand outside the country, since oil is a global market. But one of the primary traditional targets of the Fed is to keep this to about 2%, right? Let's just make it reasonably simple. And they do that by changing rates. So usually, when you can see inflation rising, you would, most of the time anyway, you would expect the Fed to be hiking rates, or at least not consider cutting rates. Whereas if you see inflation lower, you would expect the Fed to be cutting rates, or at least not hiking rates. Right now at least, one of the main caveats, or the main riders with that, is that inflation has been high for a while, rates have also been high for a while. And there is some degree, at least, of political pressure on the Fed to cut rates, because currently rates at 3.75 to 4 quite significantly higher than the annual headline inflation, and they have been for some time. Higher than annual headline inflation for some time. But the main concern there, the concern in turn from that, is if the Fed cuts too quickly, then inflation is likely to come rising again, which of course is not what anybody wants, or very, very few people anyway want inflation to be rising strongly. Makes it more difficult for businesses to plan, makes it a lot more difficult for average people to live, of course, because they don't know how much the weekly shop is going to cost next week, next month, and so on. And how it affects trading usually is what traders are pricing in. So what we use, I think the basic tool to try to determine what are traders mostly expecting is CME FedWatch. So CME FedWatch, it uses the change in 30-day futures on the Fed funds rate so it's real data to extrapolate what is expected, what is the probability of the Fed doing this or doing that. And most of the time the Fed doesn't like to surprise markets, but we can usually see after any meeting of the Fed there will be at least some change in the probabilities for the upcoming meetings. People are going to have more information, so they can start maybe planning better or expecting more accurately what the Fed is going to be doing within the next 1, 2, 3, sometimes more meetings. Whereas in one particular meeting of the Fed you usually see fairly high volatility, you just won't necessarily see a big surprise. Fed generally doesn't like to surprise markets. And usually some of the instruments that are affected the most, Ms. Joyce, would be gold and major forex pairs with the dollar. Usually around most meetings of the Fed, you can expect to see gold moving a lot, at least relatively speaking, moving a lot. Not usually finding a new trend, but there are some exceptions to that, of course. And things like euro-dollar, you can also expect to see moving quite a lot. And also cable, you expect to see pretty much any major pair with the dollar, you expect to see it moving a lot. But that's the basic approach. A slightly more advanced approach, you can read a little bit more about it at Exness Insights. Can I find a good example of that? Probably yes, maybe. Maybe it'd be under here. Yeah, that's one possibility. There's a couple of articles on here about central banks' announcements, so you can maybe look at these in some more detail if you're interested, and also different articles about how central banks are how central banks can impact trading and indices and various other things. Maybe not the Japanese ones so much, but the Fed's ones I think are quite important. If you have any interest in going deeper, Ms. Joyce, then maybe you could check that out. It's a possibility anyway. And then TJFX Trading says, if you want, I can explain all this news to you and also analyze the pair that the news affects correctly. Yes, I'm sure you can. Yeah. So feel free to if you have a divergent analysis, of course, TJFX, you have a different analysis, a different approach, then that is welcome, of course. At the end of the day, it's everything that we're saying here is opinions. If you have another opinion, then that's actually quite welcome. So I also wanted to look briefly at earnings. We've not got very many earnings coming up this month. In December, we will have some more next month, but generally speaking, the main earnings that are still to come up, I don't want recent, sorry, I want this month. Main earnings still to come up are Nike and FedEx. Broadcom, I mean, broadly speaking, I think that's quite positive. It's a reasonably positive result from Broadcom's earnings. But right now, I suppose if you're reading the financial news, you'd be aware that there's some reasonable concern about a bubble in AI. And there's lots of different opinions about this, especially if you go to on somewhere like X and you go to the For You tab. I'm not sure I'd recommend that to many people, but it depends on who you're following, whether you get something that's useful in the For You tab. And various people have different opinions. Some people think that things like all of these large language models have reached a kind of plateau of development. Various other people don't think that. Some people are very concerned about lots of jobs being lost. Various other people are not really concerned about that based on their particular field and how they're using AI in the field. I don't think we can really give a conclusive answer. And I think also for us as traders, I'm not sure that necessarily concern about an AI bubble is something that we want to be paying very close attention to. Because if we just take a brief chart of an index, it's maybe probably better to look at NASDAQ, right? And we just zoom this out a little bit. We certainly can't see any evidence currently of a crash. And we should be aware of the possibility for that to happen, but I certainly think it's a big risk for us as traders of CFDs to try to predict or to try to preempt some kind of crash, because very much crashes are the exception. Most of the time shares go up. Of course, sometimes they don't go up when we have significant fundamental or other challenges or during a crash, but we shouldn't, I think, try to predict a crash as a trader of CFDs. It's better, in my personal opinion, to try to see when the crash is starting. There seems to be some significant collapse in sentiment. Shares start to decline significantly in value. Then we can join that trend. We can sell into that trend. The CFDs, obvious use case, I think, for CFDs, as opposed to ETFs on indices, or as opposed to using, or in addition to using indices, as an investment. I'm just not sure it's a great idea to preempt. And I mean, generally speaking, I think the bias for us as traders of CFDs with indices is more towards buying. We need to be aware of the exceptions and have a plan for how to act when we see an exception. So AI bubble is something that, yes, quite possibly it's a bubble. It depends, of course, how you define a bubble. But you can read a little bit more about various things like that in whichever live feed of economic news you want to read. The Guardian's nice because it's free and it's in English. But you can also read Bloomberg. You can read various other ones like you could read from CNBC, Yahoo Finance, and so on and so forth. Loads of different places that you can read a summary of the latest important financial news. Yeah. And Ms. Joyce says, thank you. Yeah, that's fine. Thank you, Ms. Joyce, for coming every week and asking us questions. That's great. It's nice to be asked questions, especially if we can get you a reasonably good answer, which I think usually we can. So, I mean, that's the summary for the week's events is we don't have any super important earnings coming up. We have some degree of focus on Nike and FedEx, but it's not very, very important earnings by any means. We're just mainly looking at the double NFP today, and we're also going to be looking at American inflation on Thursday, really critical releases. And just briefly while we're here, I want to look ahead to next week. Because next week, I mean, it's currently scheduled, and I think maybe it's a little bit late for them to change it now. We have the estimate for the third quarter GDP. And I expect, I mean, maybe I'm going to be wrong here, of course, but I mean, my kind of gut feeling is like 2 days before Christmas GDP release, this might be pretty chaotic. So, I mean, personally, I'm prepared for it to be quite a mess. And I think really, since this has been here for a while, this trading economics forecast of 3.2%, for third quarter GDP, first estimate. I think that's kind of questionable since overall, we saw some pretty weak job data, relatively speaking. We saw pretty weak job data from the USA. So I just think it's highly questionable whether we actually see that. If we actually do see that kind of growth, 3.2% growth, then of course that would be super positive. I imagine we'd probably see the dollar pumping and gold declining, certainly in the short term. Just not just very likely that we actually get that kind of number. So I'm excited to watch the data and see when it comes out. I'm not sure whether it would actually be doing anything much about it, because around then, just a couple of days before, 2 consecutive days of holiday, we expect probably quite high volatility and a bit of chaos in various markets. So that's something to be watching next week's critical release next week. Yeah. So now I'm going to look at a few charts, and I would just say, please, you have any questions about a specific chart that you would like to look at, specific aspects of fundamental analysis, or sentimental analysis, or just an opinion or a general question, please by all means drop the question, and we certainly should have plenty of time to answer all of the questions. That would be great. And TJFX, if you have a divergent opinion, then that's absolutely fine. If you would explain news, or if you'd explain a pair differently, that's absolutely fine. Please go ahead. You're welcome to do that, of course. I don't know it all. This is just my opinion. Yeah, I would stress not recommendation to trade. So let's start with gold. I think broadly speaking, the uptrend is still active. I mean, gold still seems to me to be in an active uptrend. I just think it's questionable for the moment how likely it is that we get a push above around 4,400. Which is the area of the all-time high that was reached in October. In that we had fairly strong profit taking and liquidation of various positions after the second attempt on the all-time high, but that hasn't led to any downtrend. And I think in the environment, it's maybe a little bit difficult to see that leading to a downtrend, because I have some degree of rotation from indices into gold, right? When we have this, as we mentioned, some degree of nervousness about AI bubble, okay? And we also have maybe not super dovish Fed, but at least somewhat dovish Fed is likely to cut at least once next year. Maybe not twice, but at least once next year. And we have some degree at least of headwinds in the American economy in terms of the job market and so on. So it's really important for gold to watch out what's happening with this double NFP today, of course, absolutely. But assuming that we don't get something like really super surprising, then overall I expect it's fairly likely to see gold continue upward, broadly speaking. Just whether this is a good place to buy in, I think for a few reasons is maybe questionable, since volatility has declined quite a lot. Within the last few weeks, we've had a lot lower volatility for gold. Volume hasn't declined that much for the CFD, that's true, but volatility has certainly declined, and it's pretty close to buying saturation, or it's in buying saturation. It's not quite in buying saturation currently from the slow stochastics, about 77, or from Bollinger Bands, but it's very, very close to it. So something that we usually want to focus to some degree on saturation for gold. And I think probably some of the main dynamic areas to watch out for are, as usual, going to be the 20 and the 50 SMAs. So broadly speaking, I think it really depends on what is the result of the NFP and how do markets and traders react to it. Because if we briefly, let's just look back at total non-farm. So because if we actually get a result of 55,000, maybe it's not super positive, but where is the economic calendar here? Yeah, if we actually get a result for oh no, it's gone down. Okay, that's fine, right. Okay, that's just happened. Okay, so anyway, yes, right, it looks like they've revised down some of the forecasts. We do now have a consensus. Okay, that's good. Live. 51,000 for October and 40,000 for November. Yeah, okay, that seems a bit more reasonable. I mean, in the, I think, fairly unlikely event that we get something more like 80 or 100,000 for either or both of these, then yes, I think in that situation we could probably expect to see gold declining, possibly declining quite sharply in the short term at least. Whereas I think the base case is we get something like the consensus, or possibly even slightly lower than the consensus, then we might see at least some short-term positivity for gold. It's just a question of, we don't have that much volume here, then how quickly are we going to be moving up and retesting the all-time high? I don't know. It might take a while. And we also, I think, need to consider the context of coming up is inflation. We've got inflation coming up later in the week. So how do these releases all interact with each other? I mean, I just think the kind of obvious game plan for me in this situation, not saying that you should do this, but the obvious game plan for me in this situation is that, relatively speaking, on the low time frames, we're pretty low, for gold. So I would be probably expecting that we're going to get at least a somewhat negative NFP. Somewhat negative, maybe not very negative, but somewhat lower, or at least not a lot above the consensus. So think about buying with a reasonably tight trailing stop. That would be like one of the base cases, I think, here. But that, of course, depends very much on what is the actual result of the NFPs. What do we actually get out of it? So really excited to see what's happening there. And with Bitcoin, we can see that overall it's not doing great recently. I think for the moment it's not that likely for it to break through 80,000. You never know, maybe it will. But when we were back here towards the end of last month, and we had, I think, a reasonably strong reaction around the 21st of November from the test of 80,000, then we didn't really have another serious test of 80,000 after that. And not yet now either. And one of the factors I think behind that, as I was saying probably 2 weeks ago, is volume for CFDs and also for futures. We just don't really have that much volume that's actually going to drive the price in a sustained trend, in my view. I'm stressed that's just my opinion. It's just one factor. And I think also there isn't really any big change in the underlying fundamentals, the underlying narratives of like scarcity and security and store value and so on and so forth that makes Bitcoin appealing. None of these have like really significantly changed. I think it's questionable to what extent Bitcoin has a clear correlation with gold, but in that Bitcoin has a clear correlation, I think, with indices. And indices are most of the time inversely correlated with gold, then in the current environment you would probably expect gold up, Bitcoin down, and vice versa. I'm just not sure that's something that's necessarily consistently reliable. We don't have any evidence of saturation here, so I think it would be important to see if Bitcoin is going to be moving up to this kind of area around here, around 92, 93, 94,000. How is the behavior going to be different, possibly, around the 50 SMA, which is possible dynamic resistance. Now it's moved down a lot. It's not confirmed, but we can see from October, when there was some kind of incipient bounce late October, price hasn't managed to break above the 50 SMA from bands. So that might hold the price again. I just think we probably need some kind of fairly significant change in sentiment or in narratives for it to move much below 80,000. Most of the time, in technical analysis, we consider that second and subsequent tests are going to be weaker unless there's some kind of strong narrative or support from volume. And currently we don't see that. Whether we get a strong narrative for Bitcoin from the NFP and from American inflation, I think is quite questionable. Of course, it's going to move around this time because Bitcoin's usually priced in dollars. So based on how the dollar moves, then Bitcoin is going to move relative to the dollar, yes. But job data and American inflation don't necessarily affect Bitcoin that much in itself. So it's important to watch these data, but I think at the same time, I'm quite content to wait. I'm not sure I'm desperate to make any trades for Bitcoin at the moment. So let's look at Eurodollar. And the classic, let's actually look back at the to see if there's any questions here. Gold and fundamental surrounds. I think we discussed that briefly, Henry Decker. Thanks, Henry Decker, for the question. But if you have any other questions, please. If you want to know specifically what is your specific take on that, what specific would you like to know about gold and fundamentals, please ask, and we should have plenty of time to cover that. Only about halfway through. Yeah, definitely cold weather recently. Nice cup of tea. Ryan Jerry says, "Hey Michael, what could happen if the numbers of NFP come in stronger than 40,000?" Yeah, I think it's possible the dollar might make some gains. Yeah, thanks, Mr. Ryan, for the question. So let's look back at the economic calendar. So, I mean, if it comes in for November more than 40,000, I think this is a particularly good question. And the brutally honest answer is I don't know, because in all my time as a trader, it's like 12 years approximately, I don't remember there ever having been two NFPs at the same time. That's not to say it hasn't happened in that time. Maybe it has. I just can't remember it. I can't remember. I think this is the longest government shutdown ever. So it caused, in the USA, so it caused quite a lot of disruption. So what happens if it comes in at 40,000? Well, it also depends on what happens in October, I think, Mr. Ryan. That's why it's kind of complicated, and the simple answer is I don't know. Because if it comes out, let's say November's NFP comes out at 100,000, but October's comes out at negative 20,000. Imagine everybody's going to be like, what? And initially people might assume it's a mistake. Maybe. that would be one concern. Is, I mean, I've been saying earlier about the reliability of these releases, and it's been noted quite extensively in the media and by other traders that these releases, given how delayed they are, particularly for October, are likely to be less reliable. And you remember, of course, in 2020, when they were releasing the GDP data, they got confused between positive and negative in the GDP data for the third quarter of GDP. They were confused between positive and negative at the initial release, and of course it was a mess. Lots of people did assume, okay, it's impossible to be like plus 5% during, or whatever it was, during the middle of COVID. This must be a mistake. So that's what I think also is a potential concern here. If you see for October or November a very high result, like into six figures or possibly even like middling six figures, people might assume that it's a mistake. And so you might get some degree of mess or chaos on charts. But let's imagine that doesn't happen. Let's imagine we get the consensus for October, we get higher than 40,000 for November. We probably expect the dollar to move up, I think, Mr. Ryan. We expect gold to move at least slightly further down in the short term. We probably expect the dollar to move up. So some degree of decline for cable and for euro dollar, and also for dollar yen. I mean, dollar yen I think might be a potentially interesting one this week. We can talk about that a little bit more later. Dollar yen might be one of the more interesting ones this week, given the Bank of Japan and also the number of American data. But let's go more or less in order. I mean, this is approximately in order of what's more important and what's less. And thanks, Mr. Ryan, for the question. Hopefully that answers your question to some degree. Depends on lots of different factors. And the simple answer is, I think we don't really know, because it's been a very long time since there's been a double NFP. A very, very long time since two NFPs released on the same day. So I don't think anybody much really knows what to expect from this one. So last time we were here about 2 weeks ago, maybe it was a little bit after that, I did the classic technique of draw on the chart. And we actually had the breakout from this forming triangle earlier than expected. We had an upward breakout before when I expected it might happen. So is that a sign of strength? Basically, yes. But I think it's important to see what's actually going to happen with the NFP today. Because if we look at what the behaviour has been like when it's moved into overbought, which is pretty typical for a major forex pair, usually when it starts to move into overbought, there's at least some reluctance to push higher unless you've got really, really strong fundamental or narrative factors, which in this case, we don't really. Based purely upon monetary policy, you would expect this to be actually quite a lot lower, I think, if you're purely looking at monetary policy. If that was the only factor, you'd expect it to be a fair bit lower than this. But you can see that momentum, you can see that volatility have gone down quite a lot in December so far. Well, not really in December so far, but the last few days, overall declined. We had a bit of a spike in volatility based on ATR around the 11th. Yeah, that's true, but certainly it wasn't anything close to what had been pretty typical in September, and actually even in summer. Summer we actually had relatively quite high volatility for euro dollar, which is somewhat unusual. Now we've got pretty low volatility, and volume has pretty much stayed close to the average for much of the year, and we've also got overbought. So I think the kind of base assumption that I would have is that we revert back into some sort of range around the time of the NFP later. So my bias would probably be towards selling. I would just stress that it's not really a great idea for lots of different reasons to be making a trade like this when you've got this NFP coming up, because this NFP particularly is so difficult to predict, and also because any NFP in general, it can always give you a surprise and you can end up stuck in a bad position. And there's not really a whole lot of advantage to getting in super early, because you don't really know what's actually going to happen yet. There's no particular reason to make this trade now instead of around the time of the NFP, because it's probably not really going to be moving very much between now and then. Most of the big money, the institutional money, and many other smaller traders like you and me as well, are not really going to be super active around this time, because this NFP is coming up in just a few hours, and we want to wait and see what the actual results are of that. I realise that's maybe a little bit boring, it's a little bit risk averse in some respects, yes, but I think that's one good way, from my experience at least, to protect capital, of course. And you're welcome to disagree, if you have a preferred, if you have some prediction you think is reliable for this NFP, by all means share it. I just think like it's better, if anything, to err on the side of caution when you've got this kind of event. It's very difficult to predict because there's going to be another one in January, and that is almost certainly going to be a lot easier to predict than this one is. So, I mean, that's why I think it's worth thinking about it from that perspective. So, euro dollar we were looking at. And broadly speaking, I mean, economically, it's kind of difficult, I think, to find an obvious trajectory. If we're leaving aside monetary policy for a minute here, it's a little bit difficult to find an obvious trajectory for either the euro area or the USA. In that, okay, sure, past GDP has been a lot better for the USA compared to the EU. That is absolutely correct. But I think it's very, very unlikely, this is just my opinion, very unlikely to see this kind of growth continuing in the current circumstances. You know, you've got tariffs, trade tariffs on many things are the highest they've been in 90 years, right? And you've got an obviously weakening job market and general reluctance to invest among many sectors, and possible housing issues. We've seen that raised by Jerome Powell in the press conference last week. So I would be very surprised if we continued to get American quarterly GDP growth above 3%, or to be honest, even above 2.5%. So I think there would be definitely less of a gap. Of course, to confirm that, I might well be wrong there. To confirm that, we need to actually wait for the GDP. And I think if we look at the job market as well, it is clearly worse in the euro area for the moment, but I think it is in a trend of worsening in the USA. So it just seems to be kind of questionable, I think, for various different things, whether there's an obvious gulf here between economic performance of the euro area and the USA. So I'm not sure I would make the trade based on that. I would honestly just wait for the NFP and then take it from there. Whereas I think between Britain and the USA, it seems like we have some evidence of economic weakening in the UK. Since if we look at the most recent GDP data that we had from Britain, broadly like pretty negative. And I mean some degree of negativity, I think at least, regarding investment and regarding the job market, and also on inflation. You know, probably no very significant expectations that inflation is going to come down a lot in Britain in the near future. Might be wrong there about that, of course, I would stress, but for us to see on the 17th 3.4% or lower from British inflation, I think is kind of questionable. If we did get that, then I imagine, yeah, we would probably expect that the pound is going to go a bit haywire for a while. It often does around inflation releases, but it's just something that we need to, be prepared for. Just consider it not to be especially likely to see 3.4% inflation. If anything, I think it's more likely to be closer to about 3.6, 3.5 also seems possible. This is where that Bank of England's very likely to cut this week, and I think that's priced in. So I think perhaps if we were wanting to be buying the dollar, maybe cable is a better option compared to euro dollar. But again, that does depend on the NFP. And I think one thing I would stress here as well is from a technical perspective, we've maybe got a little bit more favourable options here, in that it's more clearly overbought. We are clearly overbought based on the slow stochastic, slightly above 80. It's not very, very far overbought, but it is a clear overbought signal. And currently testing the 200 simple moving average, which is usually quite an important dynamic area. So might expect that to reverse, possibly towards the value area of the 20 and 50 simple moving averages. Volatility also having declined here quite a lot, but maybe not quite as much as euro dollar. No obvious declines in terms of volume for the CFD. So I mean, if we were to do that, and I would stress I'm not recommending that you do this. This is just for informational purposes only, and I would also remind you that this is just a demo account, so we might set a target possibly around 132.5, and then to find a reasonably good place for a stop. Then I think we might maybe want to go a little bit higher, around 135ish. I mean, of course, what kind of ratio is it going to get us? Not fantastic, but I mean it's tolerable. I think it's okay. In an ideal world, I think we would want to try to set the target a little bit. I would want to try to set the target a little bit lower than this, and we'd also want to set the stop a little bit further away, because if it's exactly 135, it's very likely that the price, if it goes up, is going to touch that and then reverse off it. So if preferably, I would set it about 135 too. But then, of course, we get an even worse ratio there. So remember, this is just a demo account. There's a demo trade. Not recommending that you make this trade for instructional purposes, informational purposes only. I would definitely not actually do this trade. I would wait until after the NFP before doing any actual trade there. Yeah. So let's look at oil. Oil recently, I would say, has not been. I've just clicked the X on that. It was a bit stupid of me. Sorry. Oil recently has not been all that interesting. I don't think oil has been particularly interesting. And it's going down today. It's certainly going down. I just, for different reasons, don't really feel mad on trying to catch the falling knife going down or going up for that matter either. Because I mean, with the volatility quite low, it's recently moved into oversold based on the slow stochastic, and I think it's questionable whether we have any obvious new narratives in that. Okay, OPEC is widely expected to continue to supply more. Yes, that's true, but in terms of demand, I haven't seen any very obvious changes lately. Correct me if I'm wrong here, of course. I mean, I actually haven't really done detailed analysis of oil so far today. And I mean, in terms of the negotiations between Russia and Ukraine, it was not quite an impasse, but certainly doesn't look like there's been much progress being made recently. So I don't know. There might be some optimism here and there in some sections of the media about peace between Russia and Ukraine. I'm just not sure that we should overblow that too much, perhaps. Since particularly, I think, when it comes to the issue of territory and, of course, the issue of NATO, and I mean, can Ukraine actually keep fighting? Let's not talk about politics too much. I just think it's kind of questionable in various situations. So my inclination would be, and I would stress again, I probably wouldn't actually do this trade, but I would look for some possibility of maybe buying in to this sell-off in the belief that it might be more or less temporary. Set the target possibly around 59, fairly familiar from the recent range, and then where exactly to set the stop here is very challenging. That's one of the reasons why I think, I mean, I'm not really mad at all on making a trade like this. 55.20 maybe, but I was pretty close to the current price. We could try it. Yeah, let's try 55.20, and that way, of course, we get a very, very nice ratio. I just think it's fairly likely that this stop is going to be triggered quite quickly. Because if we've currently got the ATR at 112, which is relatively very low for oil, of course, that's true, but compared to something like, I don't know, compared to something like a Forex pair, obviously it's huge. I mean, obviously ATR is going to be higher for oil than it is for a Forex pair. And if we go with ATR by 2, so let's say 224, then of course we're far, far inside the ATR. And in practice, when we set our stop on a particular time frame, we set our stop within about 1.5 to 2 ATRs, and certainly within 1 ATR, then that practically guarantees that it's going to be triggered within the next period or two. So not mad on that at all. It just has a very good ratio if we're feeling confident that it's actually going to move up, which I would stress I don't really. I would probably just leave this alone. Dollar yen, one of the more interesting ones I think this week. If you have any questions, any requests, anybody, that would be great. Dollar yen, I think, one of the more interesting forex pairs this week, because we have all this major data from the USA. We also have the Bank of Japan is pretty widely expected to hike this time, because this expected hike from the Bank of Japan, we were talking about summer, then we were talking about October, and now finally we're talking about December. It's likely to occur. It's been pushed back pretty consistently throughout much of the year. So, I mean, right now, the fact that we're still on the consensus of 0.75% and we are only 3 days before, then it's quite possible that we will be going ahead. So if assuming that does happen, and also assuming that we get lukewarm or possibly negative economic data, negative to some degree from the USA, then maybe we have an opportunity, I think, to sell dollar yen here. Because if you remember 2 weeks ago, and before that, of course, as well, we were looking at in the highs that dollar yen has made, it's not very far off 160, and been various rumours, verbal interventions from the Bank of Japan, rumours of actual interventions. So if the price goes much higher, then that seems to be kind of possible. So whereas if we get some degree of reversal, not a reversal of the trend, but possibly significant retracement, then it might have the potential to go fairly far down. We just, I think we just want to be reasonably careful as traders of a major forex pair like this, not to set a really, really aggressive target. Because if we set a very, very aggressive target, then it's more likely that we're actually just going to sit there doing nothing for a while, and it's also a bit more likely that we end up just actually hitting the stop. Let's take a moderately aggressive target of around 152, and we can set the stop at 158, which is around the high. That is terrible. That's really bad. It's a negative ratio. So, from my perspective, I would maybe actually just not really want to do anything much about this for the time being, because one option in this case, if I'm not finding a reasonably good area for a stop that I'd like to take, then I suppose I could move it down a little bit, because 158 is within this wick. So if we actually reach there, then yes, it looks like we're going to keep going up again. So it might be possible to set it around 156.7, but whether that actually gives us a much better ratio, let's see. It can calculate for us. Not awesome. And then possibly move the target further down, depending upon what's appropriate. I certainly wouldn't set it much below 150. But let's try on 150.50, right, for the time being. And I would just stress again, not recommending that anybody do this. It's not a recommendation. Please remember it's a demo account. With this, as with anything else, the amount of data that we've got coming out from the USA primarily, but also from other countries this week, just makes it, I think, highly questionable to look at swing trades or position trades, or even a day trade that you're considering maybe holding overnight in the circumstances, because you want to see what's actually happening with these data, I think, before you actually enter any trade for the medium-ish to longer term. And around the data, of course, have some baseline expectation and have a game plan for both directions, and be ready, use trailing stops, I think, is kind of the conventional approach to doing it. Yep. So Joyce asks, what's your take on silver? Yeah, thanks, Ms. Joyce, for the question. Let's look at that. Let's look at not silver against Australian dollar. I want silver against US dollar. So I would say, as in the past several weeks, I remain pretty consistently positive on silver. I just think it would be very difficult to find somewhere to buy in. I know I've been saying that for a while, but I'm a naturally somewhat risk-averse trader. Prefer not to buy the tops, because you never know what's going to change or when it's going to change. Now, though, maybe slightly different, because we've had this long-running uptrend, massive uptrend, right? And it's just going up and up and up and up and up and making new all-time highs. But the volatility is also increasing, which is quite unusual. We don't usually expect to see. We usually expect to see the volatility going down and expect to see it consolidating. But no, ATR has actually continued to increase, and it's been an overbought or very close to overbought for really quite a long time now. So I certainly think uptrend's still active, right? If we bring a longer time frame, I know obviously weekly chart is very long time frame, but let's just look at it anyway. Uptrend is obviously still active. We're in the first half of a parabolic curve, and the volume definitely does seem to support, based on CFDs at least. Volume does seem to support. And from fundamentals, we've had quite a lot of short squeezes. We've had, that's going to take me to Bitcoin, but let's actually search for silver. We've had also generally pretty high volume for futures. Overall, we've had volume and open interest. We've had pretty high volume for silver futures from various sources, and it definitely does not seem to be dropping. This is from CME. This volume here, if anything, on average, seems to be increasing slightly compared to last month and compared also to October. So that might suggest that it continues. I think short squeezes in London and general demand, like some demand on from industry and then various other relevant sources to actually use silver, because that's a unique factor, I think, Ms. Joyce, that we often ignore, or I at least I'm prone to making the mistake of ignoring industrial demand for silver, which is a lot higher than for gold. Gold doesn't have much of that. But let's not go into the details of that now. If you were buying in here, and I personally, as I've been saying a lot, I'm going to probably say a few more times, we've got a few more minutes left, not desperate to buy in here, but if I were to do it, one way I think of finding the potential target would be to use a Fibonacci fan, which oh boy, in this situation it's a little bit difficult to decide how exactly you're going to set it, but I think one possibility, and I would stress that it would be a good idea to fiddle about with this to some degree, would be to use this latest round of gains and then movement down to find, okay, where are we going to set our possible target. And I mean, okay, this seems a little bit ridiculous, 74, 75, but I mean, it's there. That's one option. Fiddle about with it and see if you can figure out something that you would like. I just mean the obvious issue is if you're going to be buying silver now from about 63, it's really close to the all-time high. You set a target at nearly 75, you might be sitting in that position for a long time. So my personal take, Mrs. Joyce, is wait. I know that's a bit boring. I know that's a bit kind of risk averse, but I just really prefer not to buy the tops. Makes me a little bit nervous. One thing you can certainly do, and one thing I might actually consider doing, is just being like quite casual about this, in the sense of making a small trade and just setting it somewhere around the recent high as the possible target. So if we set a target of around 64, wait, what? Right, yeah, sorry, no, yeah, okay, sorry, yeah, that's more like it, right? Well, that's 63 is maybe a little bit too low. Let's go with like about 63.20 or something like that, right? So that way we have a like reasonable probability of getting back there. How do you set the stop? I am not sure. There's not an obvious place I'd want to set a stop here. 62.50 maybe, but then there's not going to be a very good ratio, is it? Yeah, it's rubbish. So yeah, I'm not sure what I would actually do here to find a reasonably good ratio. But I mean, let's imagine that we could find a place for a stop, right? Just imagine that I have done that. Obviously, it's not a real trade. Remember, it's a demo trade, right? Then this particular trade, we can come back to it. Silver, where were we? Then we can come back to it. We can set a trailing stop. Obviously, can't do that on this, on Exness platform, but we can certainly do that on MT5, and I think that's one option. You know, it's just maybe a good option to consider. But I mean, for me, like, unless I was really desperate to do that, I would not. I would just wait until after the NFP. Yeah, which again, I realise a bit of a boring answer, but sometimes boring can save you from losing money, which is nice. Means Nyama says, what's your take on the Nasdaq? Let's look at the Nasdaq. Yeah. Well, as we were saying before about fundamentals, we don't have any really important earnings coming out this month, and we've got generally like some degree of concern about AI bubble. So that's why I would say when we don't actually see this reflected in the chart as significant ongoing losses, then I would say other things being equal, it probably means that it's going to continue going up sooner or later. We just need to, I think, bear in mind what's happening with volume and also what's likely to happen in terms of the NFP and inflation. It doesn't have such a big effect on indices compared to major forex pairs or to gold, but these kinds of major releases will have at least some impact on indices. So my inclination would be probably to buy and would just maybe enter a little bit lower. So if we get another test of around 24,000 pending order, price at 24,000, set a target maybe around the all-time high, maybe a little bit above the all-time high, 26,500. Let's take 26,500, and stop, I think, probably could be the area around 23,500. So that's, I mean, one approach. That's one, I think, option to doing it. I would stress, remember, this is a demo account, not a recommendation to make that trade. As you can see, I've not analysed that trade very well yet. But right now, it's not really in a very, I mean, it is in the overall uptrend. Overall uptrend is active, yeah, absolutely. But I mean, on a relevant time frame for us as traders of CFDs, it's not really a strongly trending market. So I'm not sure necessarily that we want to be, jumping into something like this when we've got all this data coming up this week. Fairly close to our main technical reference of 25,000 as well. So that's one factor I think also to consider. Not particularly close to oversold though. So, I mean, the assumption I think is in the longer term, yes, uptrend continues, probably would be more likely to buy, but want to watch fundamentals, want to watch this week's data. Again, I know that's a little bit of a useless answer, Minzanyama, sorry about that, but given the volume of the data, the importance of the data this week, I think it's quite difficult to have a firm opinion on pretty much anything right now. And all of this stuff, I would stress, this is demo trading. These are not real trades, right? If they were real trades, you could expect to see me in 3.5 hours frantically glued to the screen, ready to click X on any of these if I had these open over the news, which I'm not planning to do that with real trades. Plan usually to see what is the actual result, how is the market moved in the aftermath of the actual result, and then trade on that basis. I think is usually least psychologically stressful, and also for me at least most successful in the past. And if you have a divergent opinion, then that's fine. So yes, Originals FX, and then Trader Circle Inner. Yes, XA Gold as we head into NFP. Yes, we will definitely look at that. You can stop sending that message now, please. We will look at that. But just first, since Originals FX was first, we can take some extra time. Don't worry, we'll get to everything. What's your take on Euro Yen and Dollar Franc? Let's do Euro Yen first. I think Euro Yen broadly is going to be more or less similar to Dollar Yen in some respects. In that, okay, we don't have any obvious signs of reluctance here. We don't have any slightly more extended period of consolidation. We've recently reached a new high. That's true. But with the ECB likely to hold this week and the Bank of Japan fairly likely to hike, then I think we might see some degree of negativity later in the week. So my inclination probably would be a short-term sell. Long-term, I think it's too early to see. It's too early to say what's going to look good here, because the trend is your friend. Yes, that's right. Trend is likely to continue. Yes, absolutely. That is of course true. Yes, but when we have this possible shift in monetary policy in Japan, then I think it's maybe a little bit questionable as to whether that trend is going to continue, or at least I personally would not want to be committing to that. So in the short term, I would probably look more towards selling, and I would think maybe a target around 180-ish. So just because that's where we had not quite a consolidation, but we had a few unsuccessful tests of around there. So I might set my target around 180-ish, right? And we get possibly a reasonable amount of profit. And then just as soon as we reach a new high, pretty much, then the stops trigger the stop somewhere around there, which is, of course, that's fairly high up, but I think it's manageable, it's more or less tolerable. 183. I mean, it's obviously not a great ratio, so I would prefer a higher ratio than that, but I think that's one option in the circumstances. But then of course it depends. I would just stress, right, who asked that? Originals FX. Yeah, we just stress Originals FX. You've got the both central banks of this pair meeting this week. Both central banks of the pair meeting. What it says on the chart is possibly not going to be all that relevant on Thursday and Friday, because anything could happen pretty much in the press conferences. You don't really know how the market's going to react to what's happening in the press conferences, which again I would stress, I know that's boring, this is a boring approach, but it's a reliable one in my personal experience anyway. More reliable when you have this kind of event. Sit tight for a while, prepare what you're going to be doing in different situations, and then once a certain situation has actually happened, then let's go for it. Yep. And then Trader Circle Inner asks for, and so thanks very much for the question, Originals FX. Thank you for asking that question. Trader Circle Inner says, gold as we head into NFP. Yep. I think, as I was saying earlier, I think it's probably more likely to go up overall, right? Based on what we said earlier. And you can go back, you can watch the recording, Trader Circle Inner, if you want to know a bit more about the fundamental rationale to that. Or my fundamental rationale to that, it's probably more likely to go up because we're going to have probably weaker results from the NFP, and probably I think we're going to have at least some degree of shift towards traders thinking the Fed might cut a little bit more rather than a little bit less. Certainly there's not going to be no cuts next year. Might be some slight shift towards more likely to be expecting 2 cuts next year. So that's why I think it broadly might be going up, right, gold. Assuming that that's correct. Of course, very difficult to predict. So if that is the case, then let's zoom out a little bit. I mean, setting a target around 4,400 I think is maybe a bit too risky. But if we go for something like 4,380, let's just take that for the sake of argument. Might take a little bit of a while to get to there, I would stress. And then we want to find somewhere like reasonably likely to get a get a stop. Where exactly would I put it? Let's bring in a bit of a lower time frame than that. Could certainly set Fibonacci on a lower time frame. That's one option. Yeah, maybe. Yeah, that's fine. I mean, given the size of the account, like obviously, remind you, this is a demo account. It's not a live account. Given the size of the account, if this was a live account, I would obviously not make that trade because the loss is quite high. But if I'm assuming I had a little bit more, and if this was a live account, then I think this is maybe like the least bad option for if you were to actually be trading this. But I would just stress Trader Circle in it. Why trade this when it's 3.5 hours to the first double NFP we've had in years? Why do that? Why not just wait? That's what I would do personally. I would just wait, see what the results are of the NFP, and then have my finger on the mouse ready to click pretty much as soon as the results come out. Or set up pending orders, of course. A pending order for each direction sitting there ready. Also great technique, I think, can be very successful in my experience. I just am not I don't think it's a good idea to be like entering a position like that when you've just got a little bit of time to come till the NFP. But I mean, I would stress it's not a recommendation. We're not doing live trading here. This is for informational purposes only and illustrative purposes only. This is a demo account, not doing any live trading here. Yeah. So Originals FX says, yeah, agree, thanks. What of dollar franc? I guess have to wait and see what happens with the NFP result. Yes, I think so. Sorry, I forgot to cover that. Yeah, Originals FX in my haste because we had several requests from Trader Circle in it. Somebody's keen to learn about gold. That's right, I'm keen to learn about gold as well. So let's look at dollar franc. One of the main reasons that I think that recently this is just not interesting at all is that, okay, we're not really expecting a strong trend from a major forex pair. That's true, absolutely, yeah. But also, I mean, recently it's just, when we compare with what had been happening earlier this year, it's like it's just been more or less flat for quite a number of months. I mean, depending on your approach, of course, Originals FX, that actually can be an advantage. Because what I would assume, I mean, maybe of course I'm wrong here, but my instinctive assumption is it's very, very unlikely for us to see a sustained break below 80 cents. Because how many 80 centimes? Sorry, how many times have we seen an actual sustained break below 80 centimes? Since in the last couple of months. No, I mean maybe it's actually possible, yeah, because the scale here. No, I might probably go with 79 centimes. Who asked that? Originals FX. Yeah, might maybe go with 79 centimes as being one of the possible areas of support here, right? So on that basis, that's like kind of a contrarian trade. So from the area around, it's got 79.1, right? And we have our target at towards the upper end of the range. We're not going to make much money on this, but towards the upper end of the range, let's go with about 81 as a kind of contrarian option, right? So let's go with, I don't know, I have no idea where we would set our stop for this one, man. Really don't know. Very kind of vague task to try to set a stop for this. Because it just hasn't really tested this area very much recently. Yeah, but I mean that's one option. If we're contrarians, we think, oh no, actually NFP is going to be better, then quite likely you might see this pumping, not pumping up above the the top end of the recent range, right? But certainly pumping to some degree on the relatively lower time frames. So that's one kind of contrarian option. I'm just not sure I'm mad on that. I would agree with you. Yeah, better to wait and see what happens with the NFP, honestly. But thanks very much for the questions, everybody. Originals FX and everybody else who asked a question. I know obviously the answers sometimes have been not terribly helpful because we have this important data coming up. But still, I just think that's one way of thinking about it. We've got these major data coming up. Just do what many other traders do, especially institutional traders typically, and just wait, see what's going on. So I think we're pretty much out of time. Just let me do the conclusion, and then if there is any more questions, then please ask more questions. So firstly, I want to talk about Exness's YouTube channel. In that you can, in addition to the streams that the stream that we've been doing today, you can also look at our podcasts about Born to Trade, Trading Talks podcasts, where we go into a little bit more detail about various concepts. Weekly Market Outlook gives you a weekly idea for a trade, which is temporarily paused, but it'll be back again in January. You also see what Team Pro is saying about different things. Kojo, I think, will be doing his regular live stream tomorrow. I'm not 100% certain about that, but usually Kojo will be doing his live stream on Wednesday, so you can join Kojo tomorrow. And our regular live stream, this one, Andreas and I, will be paused because it will be Christmas next week and New Year the week after that. So we should be back around the 12th of January, I believe. And then back to usual. Every week we'll be doing this. Live stream at 8 o'clock GMT. Yeah. So it's 11 o'clock GMT plus 2. So yeah, hopefully join us again in January. And in the meantime, of course, you can look at Exness Insights. It gives you lots of information that you can read about various different things with linked videos in some cases. And you can also follow us on Twitter. X, formerly known as Twitter. You can follow me, M Stark Exness. Ask me anything you want there within reason. And you can also check out some of my colleagues from the strategists. There's Terence, there's Tomislav here, there's Stan, Lishing, Inky, Andreas, Eric. Various strategists that you can follow here to get more perspectives on things. And of course TradingView. If you don't already follow us on TradingView, you can follow us on TradingView. Me and Andreas and Stan and various other people from the analysts and strategists to get more perspectives on different things. We give some opinions. I'll just remind you, of course, all of these things are opinions. They're not like facts or laws or anything like that. And everything that I've been saying here has just been my personal opinion. And some of these trades, I would stress, if this is a live account, I would definitely not make some of these trades. But since the NFP is coming up very soon. So it's just for informational purposes only, I would stress, right? So let's see what everybody's saying. I think we can close. Trader Circle Inner says, thanks, Michael. Hope you have a great day. I'm live from Uganda. Yeah, thank you for the question. Thank you for joining Trader Circle Inner. And thanks for asking questions. I think it's good to share opinions. That if we've got loads of different people thinking about something, makes us more likely to get the right thing in most cases, or at least to second guess ourselves. And Originals FX says, the market is kind of hot. I'm not in a prime spot for any movement. It's just wait and see. So thanks for that confirmation. Yeah, I agree. Yeah, I think so. Wait and see is sometimes a little bit boring, but I think it's kind of essential to avoid losing your money, in my experience at least. Forcing a trade almost always leads to losing money, which is bad. So I think that's about it. If anybody wants to contact us over the Christmas break, then you can do so using X, using TradingView, and also Exness's YouTube channel, where you do try to read all of the comments on the videos here, especially on the lives. And I would just wish you all very Merry Christmas and Happy New Year if you're celebrating, or if you celebrate something else, happy holidays in general. Hopefully you get a little bit of a winter break at least. And today, double NFP, remember, is coming out in about 3 hours and 15 minutes. So please trade responsibly around a double NFP, first double NFP we've had for years. So just take care, trade responsibly, and in general, wish you successful, responsible trading, and hopefully see you again in January for some more live streaming. So thanks very much for joining, and thanks for all the questions.